Thank you everyone for joining me in today's video. We're going to talk about Fannie Mae's latest real estate market predictions through 2026. I have a lot to share in today's video regarding home sales, home prices, and really mortgage rates because there's some very big changes over the past couple of months regarding that. I don't want to waste your time. Let's go ahead and dive right in. It says housing affordability and the so-called lock-in effect are expected to keep housing activity subdued in 2025, with existing home sales, the forecast for that, to move only slightly upward from recent multi-decade lows. So the forecast for the end of last year, which will have last year or December's numbers in about 1 week, is probably going to show us that we have fewer home sales in 2024 over the past 30 years. So about a 29-year low in home sales nationwide. So Fannie Mae is saying here that we're basically going to have just a little bit higher compared to a 30-year low in home sales this year. In regards to this lock-in effect, I don't really want to spend too much time on this, but there's one chart, just one single chart, I want to share with you guys to kind of explain this lock-in effect. In other words, people have very low rates on average for people who have loans on their houses, and therefore they're not really motivated to sell their houses and take on a 7% rate when they have a 3% rate, right? So this chart is from Realtor.com, which is a little bit messy, but I love how they share pre-COVID levels, 17, 18, and 19. Let me explain this really quickly. This dark brown line is what happened last year, 2024. In pink is what happened in 2023. Now look at this dark brown line compared to pre-COVID levels, which is basically this grouping right up here at the top of the screen, 2017 through 2019. So to start the year, looking at new listings, the amount of people who are listing their house for sale, there's around 300,000 this January, I should say January of 2024, compared to around 400,000 looking at pre-pandemic levels. So we were missing around 100,000 compared to 2017 through 2019. Then if we look into May of last year, we had around 430,000 new listings compared to over 550,000 looking at pre-COVID levels. And now we're up only by 0.9% compared to last year. Right now, at least for December, around 238,000 new listings compared to around 300,000 looking at pre-COVID levels. So this is a perfect example regarding this lock-in effect because a lot of people are not listing their house for sale. The difference though between this last year compared to pre-COVID though is actually getting a little bit more narrow, as I explained, right? 100,000 is a delta there. And right now the delta is around 70,000. Going back to Fannie Mae's latest housing market forecast, it says from an affordability perspective, we think 2025 will look a lot like 2024, with mortgage rates above 6%, home price growth easing from recent highs but staying positive, and supply remaining below pre-COVID levels. One thing I kind of agree with them regarding this. I think we'll have a lack of housing affordability this year, but I expect that nationwide, sometime this year, maybe mid-summer toward the end of this year, we'll likely have levels of inventory levels compared to 2019. In other words, I expect to see that inventory is going to increase this year and get to eventually pre-COVID levels back in 2019. Now, every market's different, right? There's around 8 states that have more inventory this December compared to December of 2019. But for the nation as a whole, we're still down greatly compared to 2019. Okay, Fannie Mae also provided this snapshot or summary looking at their forecast for housing starts, home sales, home prices, and mortgage rates. So let's first talk about housing starts. And here's how you look at these figures here. So look at single family housing starts. That's the beginning phase in the construction of a brand new single family house. So they're forecasting that housing starts of single family houses to rise by 6% last year. Again, we have not seen December's numbers just yet. Then to decrease by 1% in 25, then to increase by nearly 2% in 2026. So housing starts remaining at very low levels. In contrast, multifamily, which is defined by at least 2 units per building, that fell out greatly, down by 27% in 24 after a 14% decline in 23 compared to 22. Then it decreased further in 25 and then increased by nearly 16% in 2026. In regards to sales of brand new houses versus existing houses, this is quite a bit different. Look at 23. So sales in 2023 compared to 22 increased by 3.9%. In contrast, existing home sales decreased down by 18.7%. So Fannie Mae is predicting that existing home sales will fall by 0.8% this last year, then to rise by 4.8% in 25, then to increase by 11% in 2026. Big picture, they're forecasting for a big increase in 2026. However, at 4.7 million existing home sales that year being forecasted, that is still well below the longer average of 5 million sales. So the median number of home sales of existing houses since the year of 1989 is around 5 million sales, well above the forecast at 4.7 million. On top of that, this also means that in 23 and 24, we basically had around 4 million home sales. Therefore, we'd be missing around 2 million home sales over the past 2 years, which is absolutely insane. One more thing I want to talk about here as well is that in 23, we had 4.09 million sales of existing houses. They're forecasting for just under that, down by 0.8% last year, which would be a 29-year low in sales. So in other words, sales remaining at basically a 3-decade low over the past 2 years. Here's another way to look at this based on my own analysis of their data. And I'm looking at sales or annual sales according to the National Association of Realtors, which of course I am a member of that because I'm a realtor here in Sacramento. So the forecast, again, from Fannie Mae is calling for 4.06 million, just under that in 24, which would be a decrease of 0.8% from last year and down by 24% from 2019 and 18. Then increased by 4.8% in 25 and increased further up by 11% in 26 compared to 25. So in regards to the forecast for 2024, I have 2 points I want to share with you guys. That would be a 29-year low in home sales and about 1 million less than historical norms. Number 2, they revised upward their forecast for 2024. So for example, 1 month ago, when I made this video, they were calling for 4 million or 4.01 million sales. So this upper revision, in my personal opinion, is likely due to the fact that existing home sales this November came in way higher than expected. So for example, according to the National Association of Realtors, let me actually just share the article with you guys. Existing home sales rose by 4.8% in November, posting the biggest increase on a year-over-year basis since June of 2021. Now looking at the forecast this year though, again at 4.25 million, that is a big decrease from the forecast posted just 2 months ago. 2 months ago, they're expecting 4.5 million home sales in 2025. But they revised downward the forecast last month. Last month, it was at 4.18 million. Now it increased to 4.25 million. So in other words, they've decreased their forecast quite a bit compared to 2 months ago, but compared to last month, they're expecting it to be not as bad, to increase from 4.18 million to the new forecast at 4.251 million sales. Then next year, I should say 2026, which is next year, to be at 4.7 million. That's fairly close to a long-run average. Again, the average, or I should say the median number, since the year of 1989 is just over 5 million sales. Also, for comparison's sake, Zillow's 2025 forecast is calling for 4,160,000 sales compared to Fannie Mae at 4.25 million. My personal forecast for 2025 is about 4.2 million sales. That is approximately a 5% increase compared to what we saw back in 2024. I expect to see an increase in sales this year due to the fact that mortgage rates are going to decrease slightly this year. And on top of that, we're going to have more inventory compared to years past, giving more options for home buyers out there. And by the way, my advice for you guys, if you're a home buyer, a low level of transactions should translate into higher inventory next year. Again, I'm going to forecast here that we'll probably have inventory levels approaching or getting above 2019's levels. But because we're seeing this lack of new supply in the market, we're not going to see this sharp increase of inventory. We're going to see more or less a kind of like gradual increase this year until we peak around early fall, late summer months. Also, my advice for you guys as well is that we're just talking about national trends, right? Every market's different. So learn your market. Is inventory higher compared to 2019? Is there a lack of inventory? Are home sellers getting multiple offers? What does sales look like? Are there a lot of price reductions, etc.? Let me give you guys an example. Here in Sacramento, I have a friend who has been a friend of mine for a long, long time. He's interested in looking at buying a house. He identified a house in the Pocket area, which is just south of Sacramento. And I looked at some comparable sales, looking at what's the approximate valuation on this property. I do that by looking at houses that sold, houses that are pending, and houses that are for sale that are very close in condition and size to the house he was interested in. When I did that, I found that the asking price was right in line with what I thought the value was. So in other words, they didn't price the house too high or too low. And when I reached out to the agent this morning, I found out they had 7 offers on the property, even though rates today increased to a 7-month high, right? So every market's different and every property is different as well. So again, my advice for you guys, if you're looking to buy a house, make sure you guys are aware of what's happening in the market you're looking to buy, or of course the market you're looking to sell as well. Also, I know I have a lot of agents and loan officers who watch my videos as well. My advice as well is that despite mortgage rates being around 7%, I say here last year, but it's basically been for about 2 years. We had some fluctuations, but on average, we've been around 7% for about 2 years. And despite that, we still had around 4 million transactions that occurred last year and in 2023. So I would suggest you guys, recommend you guys, you focus on getting a larger share of a relatively small amount of home sales. And the best way, in my opinion, to do that is to deliver value to your clients to help them make a more informed decision about whether to buy or sell a house right now. All right, let's get back to Fannie Mae's housing market forecast here. Let's talk about their HPI, which is their home price index. Kind of think of this way as home values, right? So in Q1 of 24, let me just kind of zoom up here. Q1 of 2024, home prices based on their HPI rose by 6.7%. They're forecasting for that to be at 5% in Q1 this year, then to be only at 3.1% by the time we hit Q1 of 26 compared to Q1 of 25. So basically this deceleration, in other words, home prices still rising, but not increasing at the same rate. In fact, you can see that in the rest of 26. So Q2 to be at 2.3, then to decrease further to 2%, and then 1.7% by the time we hit Q4 of 26. So for the year as a whole, they're forecasting for 24 to increase by 5.8% in line with 23, then to rise by 3.6% this year, then to rise by 1.7% in 26 compared to 25. Also, for comparison's sake, Zillow is forecasting that home values will only increase by 2.2% in 25 compared to Fannie Mae's predictions of 3.6%. In regards to the forecast for average 30-year fixed mortgage rates, take a look at this because they are forecasting that rates are going to decrease this year. So Q1 this year to be at 6.6, then to decrease to 6.2% by year end. So a small decrease over the next year. Then to basically be at 6% for all of 26. So for this last year, the average rate was at more or less 6.7 is our forecast. 25 to be at 6.4, then to be at 6.1% in 2026, which is kind of going in line here with like a slight decrease in mortgage rates, which is I'm expecting. which is going to cause home sales to increase quite a bit or a little bit. So for example, Fannie Mae is also predicting that home sales will rise by 4.8%. Something that caught my attention as well, if you guys are a loan officer, look at refinances. The share of refinances, so people who are applying for loans or originating loans, whether for purchase or refi, that was only 15% of the pie. This means, of course, that 85% of mortgage originations in 2023 came from people purchasing houses using loans. But by the time we hit, 25 and 26, around 1/3 of all mortgage originations are going to be from a refi, which is basically double the share we saw in 2023. This all makes sense, right? If mortgage rates decrease to around 6% in 26, for people who bought houses around 7%, it makes sense for them potentially to refinance in next year. And with that said, if you guys want agent referral, then please email me at jason@meetjasonwalter.com, or please check out my website, which is realestateteamfinder.com. I appreciate you guys so much for watching today's video. Please like and subscribe. Have an amazing day, and we'll see you in the next video.